funding instruments. Third, energy, so trade dependence, but also transition to renewables, the role of nuclear energy, and looking for new sources and sources of gas and oil. Fourth, migration, refugee policies, but also border control. Fifth, enlargement, obviously the Western Balkans, but also Moldova, Georgia, Ukraine itself, but also a new role for or almost reintegration of the UK, Switzerland, new relationships also within the European Union with the realignment of Poland and Hungary. And sixth, politics and identity. So the impact on EU identity, European identity, the weakening of Euroscepticism, and the strengthening of mainstream parties. Plus, we have a seventh session that tries to tie all this together and address these various transformations in terms of core state powers. And this should give an overview of the impact of the war in Ukraine on European integration. I should stress it is not a series on the war in Ukraine itself, but on the impact that this war has on Europe and European integration in particular. So the format is provided, sorry, I'm hearing voices, but yeah.
We're trying to mute those participants with their microphones on.
As long as they are not only my head, I think we're... So the format is to provide an academic assessment through introductions, but also an open and informal discussion with the intended goal also that would bring together perspective from various programs of the Schuman Center. So the EGPP, but also Europe in the World, the Global Governance Program, the Migration Policy Center and Global Citizen, the Florence School of Regulation, and the Florence School of Banking and Finance. And I think this enhances a multidisciplinary perspective that we have at the Schuman Center. And I'm very grateful to everyone for their collaboration in this shared initiative. So today's session is on the impact of the war on finance and the macroeconomic consequences, plus the changes in the framework of the EU financial and fiscal regulation. So it is introduced by Thorsten Beck, Pierre Schlosser, and Maria del Carmen Sandoval Velasco, all of the Florence School of Banking and Finance. So thank you very, very much for being with us and for introducing this session. We're in hybrid mode, and the discussion will alternate between people present in the room and those following online. So thank you very much, everyone, for being here today. I think we are ready to start. If you like to share your screen, and the floor is then yours. And you need to switch on your mic.
I can't.
If we move it here, yeah.
No, I can't.
No, because the screen is not active.
Yeah, maybe that's because that's not. Sorry, if you go here, sorry, I need to see what I can do.
Yes, and here.
No, but this is not the one that you share. No?
Can I see?
Yes, yes.
I'm not sure I will manage, but it's fine.
Yes, exactly. Just to get the guys excited.
Okay, so let's do that. This. Now I should do it with the. You need to look there, and you need to move it from.
Oh,
this.
I can.
Oh yeah, now it works.
No, it works. Okay, but that's great. Okay, but I try my best. Okay, great. Thank you very much. shall I just use this one? Okay. Thank you for inviting us and to kick off this this session or the series. Now, just as a kind of way of introduction, so I have here Maria on my left and Pierre on my right. Also, this, as you're going to see during the presentation, I'm an economist. I'm framed by two political scientists, so we're going to have different approaches, different perspectives, which I think hopefully will enrich this discussion further. We're going to kind of hand the microphone back and forth here. But I'm going to first talk very little bit about the macroeconomic financial consequences, which is of course kind of also characterized by lots of uncertainty. And then we're going to split the main part of the presentation, the impact of the war, of the conflict on the EU according to three dimensions: actors, instruments, and rules. And then finally conclusions, and then hopefully questions that can be addressed during the discussion. So very briefly, and now I hope I can see this part. So the macroeconomic financial consequences, so coming out of the pandemic, everybody was a bit excited because things seem to be going well. The banking sector came out much more stable, actually, much healthier than expected. I was actually during the crisis, I was part of the discussion on that, and there were big fears. These fears have not materialized. So on that front, good. There was this initial increase in inflation, which nobody really took seriously. But of course, and there was this idea that GDP and GDP would basically go back to the pre-pandemic level, and would the growth path would again be picked up. Now, of course, the invasion of Ukraine, the war, has kind of canceled these ideas or these projections. As you can see a little bit there on the upper left, the kind of predicted macroeconomic path has of course been downgraded. If you look at all kind of projections, this is from the IMF. You get similar projections from other institutions such as the European Commission. And inflation expectations, these numbers look a bit small, but the zero line is basically the 2% line. So it's how much more inflation do you expect on top of the inflation target versus 2%. Again, I remember sitting in a seminar with a macroeconomist called Ricardo Reich in late February, him talking about inflation expectations and basically saying, well, the US, yes, there are inflation expectations of up to 6%. So if they've really moved kind of, they had a fear of unanchoring the inflation expectations around 2%. He didn't mention UK, but I think there is a similar issue. But he very clearly said the euro area doesn't have any problem. In the euro area, the inflation expectations are still below 2%, actually. Now, of course, this has also changed now in the euro area. Maybe the expectations haven't risen too much above 2%, but we definitely have a inflation problem. And we have, of course, the indications now, very strong indications, that there will be at least a move towards positive interest rates in the second semester of 2022. Let me see. No. Not sure what I'm doing wrong. Yeah, but here I can't just, oh, whoa. That's going too quick.
Perhaps with the
What?
rows, you could use the-
No, wait, this one here, yes, okay. Very briefly, it's a bit of a complicated graph, but this shows the kind of the exposure of the banking sector on in Europe on Russia. You can see that the most of the exposure actually is to Russia, so to the sanctioned country. There's almost nothing to Belarus, which has been an isolated country anyway, and somewhat on Ukraine. But again, the biggest impact comes really to asset exposure to Russia. You get similar things if you look at other elements of the balance sheet, of banks' balance sheets, such as the liabilities, for example. Now, all of this is more like a kind of static analysis, like an ad hoc kind of current situation. But of course, there can be lots of second round effects. And of course, we don't know what will happen next, right? How will the war develop? How will the energy situation develop? How will the sanctions develop? And will there be other parties, for example, be pulled into the war? So also depending on that, there are lots of possible second round effects and some second round effects, which we actually already kind of see. Yes, of course, the impact of war and sanctions on trade itself, with some EU countries more impacted than others. There is the energy price, and therefore sometimes a little bit of cost of living crisis. Again, the country where I used to live, UK, is of course much more affected than other countries. But of course, they're also affected. There's also an effect on energy-heavy sectors, and that can become worse if, for example, there is a disruption in gas supply or more generally in energy supply. And of course, I mentioned this already, rising inflation leading to at least a normalization of monetary policy, maybe even a tightening. What impact will this have on sovereign debt spreads? I mean, there is already kind of opening up the spread between German bonds and Italian government bonds. Will that get worse? With the economic situation, maybe also the fiscal situation, will there be more divergence within the euro area? So all of this, of course, rings alarm bells among us academics, of course, by regulators, authorities, in terms of whether there might be another round of crisis coming along even after maybe the war is hopefully over soon. So this is kind of setting a stage. I already took too long, but then let me maybe, I think it's your turn, right? Thanks.
Yes, thank you. So like after Thorsten make this panorama, sorry,
It is on.
it's on. Yeah, okay, I need to be louder. No, after Thorsten presented this macroeconomic panorama, I would like to focus now on the main topic of this seminar series, which is how the war in Ukraine is transforming and will impact the European Union, and what is the effect that it will have on EU integration. So we know, and already Daniele highlighted that since February 2024, the war in Ukraine has had an important impact in the European Union in different realms. And we observe this also as a sort of new crisis to the European Union that has been added to the list of many multidimensional crises that the EU has been transiting through since 2008. No? If we think about Europe, we cannot think we cannot think about Europe without thinking about crisis since 2008. No? So this crisis also adds to this list of many multiple crises. And of course, as we know, crises often are disruptive events that bring new pressures, external pressures to the European Union that makes it facing the need to rapidly respond to these external threats, pressures, and take new actions, influence policy agenda, change priorities that may also have some sort of impact in terms of the actors of instruments and maybe rules. No? And also we know here that at the EUI, especially Hans-Peter Krisi has a very interesting crisis-led integration theory on this crisis pressure within the solid project. So more or less, this is the idea, no? The pressure of this crisis, how it impacts the European Union. And in terms of the economic and financial and fiscal domains, it's very difficult to see now a real change in the EU as a fiscal union or as a financial union. But we identified 4 main realms or spheres that you can see here, in which we can see already some changes in the EU related to these domains. No? First of all, in terms of the policy agenda, no? How this crisis is, I mean, we haven't already get out of the pandemic crisis, and we are now in this new one, and it has forced as well to the EU to put new items into the agenda to first how to deal with the security threat, but also to think about how to cope with the macroeconomic consequences of the war. No? And we made this reflection in terms of how the EU financial actors can contribute to respond not only to these security threats, but also to the macroeconomic consequences of this war. And we will dissect these different spheres, the actors. We were thinking how this crisis is contributing to transform some actors like the European Commission, the European Central Bank, in terms of their faculties and roles in the EU, and also like the agencies, for example, like the European supervisory authorities and as well some other actors like the European Investment Bank, which also perhaps will have a relevant impact as well in the way the new responses to policy responses to this crisis, particularly in terms of financing the energy transition, will be involved. And also we thought about the European Stability Mechanism. Pierre will further develop on this, but also we see some impact in terms of the instruments that we ask how this crisis is impacting in terms of transforming or reforming the current instruments, or perhaps opening the door to a debate of creating new fiscal budgetary instruments, or in other realms as well. And also in terms of the rules, we see a clear impact, the debate on the Stability and Growth Pact, but also on the state flexibility of the use of the state aid rules. And now we'll unpack these elements, and I will let Pierre to talk about the actors.
Thank you very much. It's a pleasure to be with you and here with my colleagues. This is an early assessment, so we're going to be very interested and curious about the exchange that we're going to have. And I hope that at the end of the entire session, not only at the end of our presentation, we're going to be all smarter about possible causes and likely implications. So what we did was a first assessment. In this room and in other rooms at the UI, you remember that whenever there was a big crisis, there were some people, and I was among them, to say, oh, this is the Hamiltonian moment. No, so I guess that everyone working on the fiscal union or on the European integration was also thinking, when the war started, this might be a catalyst again. And we're not alone. I mean, Macron had this very much in mind, holding also the EU presidency, trying also to sort of bandwagon on the already big achievements of NGU and say, well, we need something sort of similar and have a joint mutualization that is of scale, because we're going to need to mobilize resources, etc., etc. Now, with the effect of time, we could see that so far this hasn't materialized to that scale. And so when we look at the actors that have been impacted, and what I want to ask in the following minutes is basically what's the broader question about EU institutional change that we already can see, looking at the actors landscape that we know is really, really fragmented and very complex, especially when we talk about economic and financial union. Because, you know, as you're aware, in the standard EU setup, we've got, in terms of executive actors, the Commission, front and center, a few others, but in banking and finance, we also have the ECB. We also have really technical bodies that we will spend a bit of time on. So my proposition here is to say that institutional change will be path dependent for the Commission, but path breaking for both the ECB and the SSM, as well as the anti-money laundering authority, which is about to be created for different reasons. So on the Commission, I expect it to be path dependent on basically following the lines of what the role of the Commission was on NGEU. And we'll spend a bit of time on this in a few minutes. With the difference that also politically, there is another actor within the Commission that is the high-level representative, that we have to see whether it's going to shoulder the initiatives of the Commission or not. As of now, we can see that, you know, after this first phase where we could have expected it to be a sort of an intergovernmental moment, again, the Commission took a sort of upper hand in orchestrating. We don't know how long it's going to last. We don't know how much they're going to be able to pull off, but this is at least a first observation. So a bit of past dependence there. In terms of the ECB, very interesting, because the ECB, as you know, I mean, they had this underlying inflation coming up already before the war. People were starting asking, you know, are you going to do something about it? And the answer was, this is temporary, and we look at the medium term, which is always a very pleasant answer, and interesting one, except that it's the core of its mandate. And we know that the independence of the ECB is really linked also to it delivering very much on its inflation mandate. So I would expect the ECB now to be under quite pressure to deliver on that, to make sure that basically it's become a bit more classic and a bit more boring. They just renewed their monetary strategies. They have all those tools that are updated to have a monetary policy oriented mandate again. And that is something that is past breaking, in the sense that if you look at the COVID time, but also before, especially before the Euro crisis, the ECB was the sort of crisis manager of by default, because the others and the political actors didn't step up their game. On this, it's a security crisis. They have to work on the inflation. I suspect them to be sort of really focusing on that and not playing a super active role. Also because they're going to be the bad cop in that game, because they're raising the interest rates. They're going to have to deal with quite an amount of uncertainty also on the variables. Commodities markets are having, so it's a big supply side shock. There are a lot of variables to integrate, and they don't exactly know in which direction things are going to go. There is also the supply chain side. It's not only the commodities market, including energy. And that's going to be, I think, an analytical challenge that we expect basically the ECB to deliver on. So that's on the ECB side. The SSM, just a parenthesis, so that's a single supervisory mechanism. It's, let's say, the central actor of the European Banking Union. What do? They sit in Frankfurt and they supervise large banks. And we could already see that they have contributed, because one of the banks that they supervise has also put under failing or likely to fail, because he was a subsidiary of a Russian bank. So they are acting on a very technical level, technical analysis. But then the question is whether, to me, I see a pressure developing to making sure that the SSM also acts more as a sort of vehicle of EU policy. The sanctions, it's not their job to monitor the sanctions. It's the job of national authorities. They're the first to say on their website page, this is not our job. At the same time, there are risks in second order effect way that are going to impact them, be it anti-money laundering risks, cyber risk, or others. And that is something that the SSM as a whole will need to take into account. So they are sort of anticipating how the war in Ukraine can already fit into their mandates. And one of the speeches that the chair gave recently was on ESG, so environment, social, and governance. So there's a new category of risks that the SSM, even before the war in Ukraine, ramped up in terms of interest, as everyone in the industry. And that might give them a bit of grip, but it's going to be interesting to monitor that and see to what extent they are going to be able to model geopolitical risks. I mean, before it wasn't really a risk category. You had credit, liquidity. I mean, all the things that you discussed in Basel, in the Basel framework. And this is something that I think is going to also need a ramp up of capacities at the SSM level, also analytically speaking. Another angle they have is business model risks. So they can also look more at how banks develop their business models. So, and there you can also try and understand the exposures that they have in certain countries. But again, before it wasn't really on the map. And so it's interesting to monitor that in a bit more detail. So a functional push there. There will be a functional push on something that doesn't exist. So that's quite interesting. So it's the Anti-Money Laundering Authority. So the Anti-Money Laundering Authority has been proposed by the Commission last summer. They have quite an ambition. They had an ambition plan before the war in Ukraine, and now we can wonder whether they're going to accelerate or not. But they want to establish an authority that's going to be directly supervising large cross-border financial entities, and not saying only banks. And they want to establish it in next year, essentially, with 250 staff members by 2026. So it's going to be formally, I think, an agency. And we know that, of course, the Russian financial flows and also the AML flows partly overlapped in the past. So there will be quite an agenda on making sure that this authority gets off pretty fast. There are two actors that are there, as we know, and you always wonder to what extent do they play a central role. The EIB was a bit more marginal on the whole COVID and GU because Commission took center stage, but there will be, in my expectation, from the moment that the new energy policy is set, and from the moment also that reconstruction is on the agenda, the EIB, which is sort of climate bank as they branded themselves now, will gain increased attention. And then the ESM, I've put reports on my desk are greatly exaggerated. The ESM came up again with a proposal that, you know, we can do something, guys, and then no one really listens and cares. Not a bit like during COVID times. They have, I mean, they sit on a lot of money that is basically standing idle there, and callable capital, of course, it's not. But you know, will the ESM be playing a role in terms of mutualization in this occasion? I'm quite skeptical, but it might be still a moment to discuss, you know, what's the exact sense of stability if the mechanism is created and no one uses it really. So I think that was a snapshot on that, and something that goes beyond the analysis on the EU impact is really a development that I wanted to flag, which is how, to what extent financial innovation has been used in this war has been absolutely stunning on both sides. I mean, the Russians some have argued that they are using crypto assets to go against sanctions and to make sure that they could find sources of payments. The Ukrainians are having really super innovative ideas about how to use different types of crypto assets to finance to finance a war effort, and crowdfunding in the case of jets, which I'm not sure how successful it's been, but I found the idea quite bold and quite interesting that someone said, okay, let's crowdfund the jet because we need more air force. And it's probably one of the first wars where those tools are used to such extent. So that was just a parenthesis I wanted to make, but it will impact very likely the agenda in terms of the crypto regulation and supervision, as we can expect. I was too long, please.
I can just add one point on the ESM. So, I mean, I guess a lot of it will depend on who the new, is it chair, or is it, what is it, the new ESM chair will be. I mean, the choice will of course send a signal, but then also the person itself will have probably an important role in terms of defining what the future mission will be.
Yeah, it works. Huh?
Yeah.
Yeah, besides the impact in terms of the actors, as I mentioned before, we also see a potential change in terms of the existing instruments. We asked the question of to what extent this war is being an incentive or an opportunity to use current instruments, or create new ones, or reform the ones that they are. No? And we already see that in different domains like defense, cohesion policy, and also fiscal budgetary instruments, we see a change in terms of in the way some instruments are being used. For example, I will not develop on the defense realm because I know there will be an entire seminar dedicated to defense and security. But of course, like the idea of increasing Europe's defense capabilities and also member states' defense capability means like the need of more money, so more expenditure. Already the EU activated the peace facility mechanism. It was the first time it was activated for by the aid to an external country to purchase lethal weapons. And it's 1.5 billion euros as a part of a CFP instrument, which is outside the EU budget. So I think that the total of these instruments is 5 billion euros. And but this is, we see this, the use of this mechanism to support military aid to Ukraine. And I think the most interesting change that perhaps we will be observing is related to the fiscal and budgetary instruments. We know that, of course, this war it's bringing already heavy costs for the European Union, not only regarding the reconstruction of Ukraine, but also the energy transition, how to finance the energy transition and the independence, Europe's independence from Russian oil and gas, and also how to deal with the migration flows and the humanitarian aid besides dealing as well with all the heavy macroeconomic consequences of the war. So we see then this panorama that the EU will have like a list of many different things that will be needed to finance. So there is a very interesting debate on which will be the main instrument, the fiscal instrument to finance all of this issue. No? So there's this idea of like perhaps transforming the Next Generation EU into a permanent mechanism, or use it as a precedent to create a new one. And or using part at the beginning of the war and early March, there was this debate between in the framework of the French presidency and this meeting that they held in Versailles in early March, whether to use some of the existent funds of remaining funds of the Recovery and Resilience Facility to finance for example, the energy independence, no? Because already like some of the funds are allocated to the target of the objective of the energy transition. So we see this instrument, and perhaps this war will also open the possibility to rethink about the new EU fiscal framework, because it will be needed. But it's already early to see if this will trigger more integration, but at least opens the opportunity to rethink these new fiscal capabilities or new plans to finance all these costs. Also, we see a change in what regards the instruments of cohesion policy. There was this proposal from the European Commission to flexibilize the rules in the use of the cohesion funds to support the member states to give aid to the people fleeing from the war in Ukraine. No? So the proposal is this cohesion action for refugees in Europe, and basically the member states will be capable of use existing cohesion funds instrument to finance the aid to refugees. And in terms of other instruments, now I'm sure that all of you have heard about this new sort of Marshall Plan proposal trust fund for finance to rebuild Ukraine, or for the reconstruction of Ukraine. And there is also this debate if these trust funds that the Commission is proposing should be following the Next Generation EU approach of a mix between loans and grants to help rebuild Ukraine. So this is also in the table of debate. And the last instrument that I will mention is related to the energy, the plan of the European Commission to accelerate the EU's energy independence from Russia by 2030. So they presented this Repower EU, but again, I don't want to go deep into details because there will be a session on energy. But it's interesting, no? How, first the policy agenda and the potential changes in existing instruments, and also the opportunity perhaps to open the door to new ones. No? So here, of course, the idea of us was also to start a discussion with you, especially in what respects to the fiscal and budgetary instruments. What would be the future of the current instruments, or perhaps new ones, to finance all these costs? No? And now we just need to talk about the impact on the rules.
Okay, let me very briefly talk about this. So Maria was just talking about the kind of joint fiscal policy measures, or common fiscal policy, but we still have the Stability and Growth Pact running around there, which was, of course, to remind ourselves, introduced basically to underpin the sustainability of the euro with introducing certain fiscal discipline, which of course it hasn't really supported, it hasn't really fulfilled its function, as I think most economists, but at least would agree by now. We know it has been suspended during COVID-19. The question is, and there was of course a discussion already going on, whether or not it should be we should go back to these rules. I think for 2023. People were nervously watching the new German government in terms of signals being sent, and then the Germans said, yeah, we like them, and we're going to have some trust funds on the side, but we're going to put all of the additional expenditure to maintain the rules. So I think there's of course, now with the war, it's even more difficult, and I think I would say probably unlikely that we will return to the strict implementation or interpretation of these rules. Very important, even economists like to forget this, these ratios, so fiscal deficit and government debt to GDP, they are ratios. So they can change either because your fiscal deficit or debt changes, or your GDP can change. And of course, if GDP drops more than the fiscal deficit, as we've seen it, for example, in Greece, then this ratio can also go up. So I think both sides have to be watched very carefully. But the question, kind of the more political question is, I mean, where do we go? There has been already kind of a discussion has been started on whether to reform them. So one of our colleagues, Jean-Pierre had made a suggestion in terms of more national goals, objectives, or rules. So the question is, well, they will be probably suspended. Will that be just an ongoing suspension, or will it actually eventually and hopefully end in the reform of this Stability and Growth Pact, something much more sensible than the current structure? The second rule I want to briefly mention is the state aid framework, which again is a critical element to underpin competition within the single market. So it is very important. But of course, during crisis time, it has been suspended. There's a tradition, global financial crisis for the banking sector. And during the COVID crisis, and it was, my understanding is, it was supposed not to be extended, or the suspension was not supposed to be extended beyond 30th of June. Now the question is, what if the economic hit turns out bigger? What if energy rationing is necessary? I mean, again, these kind of situations probably might or could also call again for suspension, possibly not for the whole economy, only for certain sectors. But I would also expect there to be some action happening in the next weeks and months. So, and I think, shall I just go very briefly through this? I think we have already spent too much time. So, but yeah, so I guess in summary, we don't really see at this stage, we don't really see any immediate changes. But of course, the policy agenda has changed. The relative importance of players has changed. Some have more go in the foreground, others step a bit back compared to previous crises. As also Pierre mentioned for the ECB, for example. There are new kind of challenges, maybe threats arising, crypto, for example. And of course, looking forward, the reconstruction of Ukraine will have a critical impact also on the EU economic structure, in the EU kind of polity, in terms of decision taking, in terms of joint resources, and so on. So I think this is probably just a trigger, and I think it might be a trigger for longer term kind of reform discussions that might happen. I don't know what for framework we typically say, 5 years maybe, or 10 years. So I mean, it depends how the crisis develops, of course. So, oh no, I can't do that. That's too small for me. Can you? So these are some questions that we put up for kind of for discussion. But of course, anything is said, the floor is open. Maybe I should just leave this here and not read it, but maybe turn over to you, Daniela, and next.
Yes, thank you very much. Thank you very much. An excellent overview, and thank you also for the connections you made to other seminars. I mean, you mentioned the security, you mentioned the energy, and obviously there are connections to every other aspect because everything costs. I mean, migration will cost, reconstruction will cost, and energy transition will cost. So everything has a bit of financial aspect. But yes, at this stage we open up the floor for comments and discussions until. We have until 2 p.m. Maybe you can quickly state your name and
Thank you. Thank you so much. So I'm Rachel Epstein. I'm a Schuman Fellow for 3 months here. Thanks for letting me know this was happening. It's really interesting to hear you weigh in on these issues. As I think Thorsten was finishing what he was saying, it seems like the premise of your presentation is that the crisis could spark integration. But on the other hand, you gave some examples where integration would seem to be suspended or put on hold, right? So there might in some areas be actually a reversal, particularly thinking about the budget rules or the last thing you talked about, state aid, to the extent that the crisis is used to suspend some of the integration measures, you could have competing tensions in a way between more integration in some areas, but definitely less, where the exigencies of the crisis seem to favor a more national approach.
Very quickly.
So if it's a quick reaction, yes, why not?
I don't see the fiscal rules as integration, honestly. I mean, maybe because I'm an economist, but I think it's actually, I think these rules were put, the SGP was put in place kind of as a substitute for fiscal union or for fiscal integration. So I think, I mean, maybe because I have a different view on that, but it's, so I'm not quite sure that I would see the suspension of the rule as of these rules as kind of again going against the integration. And more generally, I mean, I have to say I was very, very surprised by the up to now kind of very joint front that the EU has taken, for example, on sanctions. So that was actually, I think there was the concern that this would go much more slowly. Now, of course, there has been more hurdles now, more barriers, but at least the initial reaction within a week, I think that was, I think, more impressive than many of us, at least might have thought.
Thank you very much. We have a question from over there.
Hi, my name is Tobias. I'm a research fellow at the Robert Schuman Center. Thank you very much for this sort of very lovely broad overview. Sort of have two economics-y questions, and which I'm actually really sort of interested in, right? And the first, I mean, you mentioned it, you know, inflation anchoring and everything else, but we're clearly not in a wage price spiral like in the 70s, right? So I'm really struck by what the central banks are actually supposed to do, because I mean, I know the data in the US, right? Half of the inflation is coming from corporate profits, another third from non-labor inputs. So I don't really see how changes in overnight rates that commercial banks pay, you know, the transmission channels will be so slow. So in the short term, you know, do they actually have instrument in the arsenal to deal with this type of inflation? And the second question was just, you mentioned inflation, but you haven't talked about exchange rates, right? And we see everybody's expecting the Fed is tightening faster, you know, which is probably going to continue to that the dollar appreciates vis-a-vis the euro. Do you think those changes in the exchange rate will have consequences for the inflation trajectory in Europe and cause some kind of, you know, problems for funding markets, either for commercial banks or for sovereign debt?
Okay, well, these are tough questions, I have to say. I'm not sure I can give a satisfactory response. So I think the situation in the US and Europe is a very, or let's say US and the euro is a very different one. So I think in the US, you do also have a demand overhang coming from the fiscal response, which was much more aggressive in the US than it was in most of Europe. But as you said, and then the other interesting thing is that there is this extremely tight labor market right now because of the Great Resignation, which hasn't. I mean, there are people who. I mean, I'm not an expert on that, but there are people who think that the Great Resignation might kind of revert at some point, but that might take some time. So, and then to reintegrate people that have left the labor market might also be easy. So it's a bit of an odd situation. So, for example, today. From the UK, so I follow a bit obviously UK news, but it's the lowest unemployment and the highest inflation rate at the same time since 1974. So that's quite. So we are still not in kind of the stagflation phase, right? I mean, we might get there. Stagflation meaning a recession plus high inflation, but at the same time it hasn't really shown in unemployment. So that's the one, which of course makes it also easier to increase the interest rates. But again, at the same time, we don't necessarily expect, definitely not an immediate and maybe also not a medium-term impact on the inflation rate, because again, especially in the euro area, as opposed to the US, it's really driven by supply side shocks. It is the still supply chains, and this will probably get worse now again with China. And it is the energy prices coming from and maybe further disruptions from the conflict in Ukraine. So I don't think central banks are in an easy spot right now. I don't see that they can easily find a path back to the 2%. So I think there will be lots of turmoil. On the other hand, I think I'm not sure how much pressure there will be on the ECB for that, because I mean, I think most people understand that this is not just standard recession where you know what to do exactly. Oh, sorry, one more thing on the. I'm not quite so concerned about funding markets. I mean, that's also after the initial initiative, for example, in 2008 and now also 2020, these swap lines that the Federal Reserve has kind of implemented together with our major central banks, including the ECB. I think that takes a lot of pressure away. So there, at least in the financial markets, I don't see any immediate big turmoil coming. There might be further down the road, but at least at this stage, I would not be as. But again.
Would you need to rejoin quickly?
These are very, I think it was these are really open questions, and I just wanted to see what the thoughts are. I think this is as good an answer as probably one can give at this point.
Very good. Thank you. I don't know if your two questions are exactly on these points.
Actually, I wanted to raise the supply chain issue, which has already been mentioned now, but the supply chain problems have to do with China. The demand overhang is in the United States. So both don't have anything to do with Ukraine. So, I mean, the problem of inflation is also caused by energy prices, which has to do, and food prices, which has to do with Ukraine. But I think we should not just focus on the Ukraine crisis when we talk about inflation, but we should broaden the perspective and introduce the additional reasons as well.
No response needed. I perfectly agree. Yes.
Okay, thank you, Adrienne. But you would need to have the mic. Anna, can you pass the mic? Thanks.
Thanks very much for these interesting insights. I have follow-up questions regarding the reactions of given institutions, ECB and ESM, as you mentioned, and on the other hand, the open arenas in which reforms are being planned, or maybe suspension of planned reforms. Do you have more information on the second as regards the conflicts in these arenas? Which actors are, for instance, in favor of changing cohesion policy in a particular way, and which are opposed? Do you have more information about this? Or regarding the use of a Marshall Fund, what are the conflicting actors in these arenas?
I would love to, but I don't have specific information. Where we can reason together, Adrienne, is on the member states. Because one of the things that I think, to me, the whole crisis is bringing basically a recast on how member states perceive their own resources and how they're going to bargain based on that. I mean, look at the energy dependence, the energy capacities. Germany is going to be quite differently affected than France, who has 78% of its energy from nuclear power, right? So this is one. Two, also the refugees crisis, the military capabilities are different. So this is where I think at some point we could discuss about, for example, the North-South coalition on fiscal issues that has been pretty stable over the last, I don't know, 10, 15 years with, let's say, Germany and the Frugal Four. Finland was part of the Frugal Four. So are they gonna, because now they're applying to NATO, are they gonna follow the same logic as in some instances in the past? And, you know, when the Greek bailout was on the agenda and they asked for collateral as an island. I mean, I don't think that this is going to come back. And this intensity and this radicality of conflict between the North and the South, I wonder whether this is going to be the case as it was in the past on fiscal issues. The other element is, of course, also the Eastern countries. The Baltics were also quite blocking on some instances, and you can wonder whether whenever there is a debt mutualization issue, even if it has nothing to do with defense and security issues, there will be, as part of this new coalitions, a reflection in my mind about what are the issue linkages and where can I bargain to get something else in the next round. And I think that this is to be monitored. But on your question, yeah. Yeah.
Really, the member states are important actors. As we heard from Lindner, yes, difference and say we have to go back to the old rules of stability and growth pact, for instance, right?
Yeah, probably not only the only actors. I don't know, certain sectors who have trade with Russia might mobilize when the sanctions break down. Daniel?
Daniel Boxler, Central European University. That was a very nice presentation for an interdisciplinary audience, and maybe now it backfires because you get now these interdisciplinary questions which are impossible to answer, but I'm trying it nevertheless. Well, I've learned in a very macro historical, macro sociological perspectives that wars are creating states. Because in order to fight a war, you need to recruit the military, you build state capacity, you need taxes, so you introduce new taxes, you get financing. I think there's also a link, at least some claim, with the welfare state. What I am asking myself is whether we are now, what we are experiencing now in the context of this new war, big war which affects Europe, whether we are just seeing these micro mechanisms which have already been in place in the very same way after World War I, World War II, in earlier wars, or whether there is something different. I'm not sure whether it's possible to answer that out of curiosity.
Yes, it's a great question. I mean, yes, wars make states, but wars also bankrupt states. Huh? So there is also the other possibility.
I have a historian on the FBF team, unfortunately, but you have no response. No, I would have to think. I mean, I think it's. I mean, again, this is. I guess I'm showing my age. I mean, when for my generation, Generation X, I mean, 1990 was this kind of break year from where things almost not maybe completely linearly, but kind of improved, right? I mean, we had peace in Europe. Balkans, okay. We had freedom, we had democracy, expansion of the EU, and so it was always going one way. It was always getting better, right? I think now we are, since basically 2016 with Brexit and Trump, things have kind of been completely disrupted. And I think this is yet another shock, which might even have more impact in terms of how the whole state order in Europe, but also the role of the EU, for example, in the broader European context and the global context might change quite dramatically. And again, it might be the beginning of a very disruptive period in human history, right, or in European history, maybe similar to the 20s and 30s of the last century. I don't know. I mean, we always hope for the best, right? But we're definitely living in very interesting times.
Okay, thank you. Philip?
Yeah, on this question, whether wars create states, of course they do, and the key mechanism is fiscal demand. What I find interesting about the Ukraine war is that the fiscal demand on EU states is still much lower than during the COVID crisis. So the COVID crisis was much more expensive than the Ukraine crisis. That may change, of course, but as of now, fiscal pressure is relatively low. And secondly, if war increases demand for the state, the question still is at what level? You have the nation states, the member states, and you have the EU level. And the question is, will the war strengthen the state at the EU level or at the national level? And I think what you observe right now is that it really strengthens the member state level, the national level, and not the EU level. I think Rachel had that right. So what the EU had in terms of regulatory authority in state aid, in the Stability and Growth Pact, also in some tax laws, for instance, they have given up in order to facilitate the mobilization of national resources. I mean, what's interesting to see about the Southern Coalition is the Southern Coalition, Greece, Italy, all these usual suspects, and they, in the past, they tended to ask for joint debt, some kind of mutualization. And Macron has tried to trigger this again, and nobody really followed. This time, Greece and Italy and these states, they want exemptions for military expenditure from the Stability and Growth Pact. That seems to be their thing. I'm a bit puzzled by that, but you know, that also indicates that the reaction is really on the member state level much more than at the European level. The European level, as I've said, orchestrates and coordinates a bit, but the action and the mobilization of resources is really at the national level. One question I had on the EIB, and because I find this institution very puzzling, and you mentioned it in passing that it could be a major contributor to the financing of the energy transition. And I would like to know what role exactly would the EIB play, or could it play potentially?
Thank you. Would you like to react?
I can start, and then Thorsten and Maria feel free to step in. So yes, on the reading up about the national level taking predominance, I'm with you, because I still thinking that as of now we're in the security phase. So the energy transition hasn't been internalized, and the scale of it by member states, and also by to what extent the EU can act then as a leverage and as a relevant level there. There will be some member states which will not be interested, but others, and I'm looking also there at the East, and especially also this country that heavily depends on gas, will also realize that there will be huge investments in liquefied natural gas terminals, for example, that they can't sustain on their own, and the market will not provide on its own. So I do think that there will be a level of where it makes sense to pool resources, and where the EU, after Repower EU will be announced and published, it might create a momentum there. On the EIB, yes, I checked the other day. I think it's not an institution, it's just a bank in the treaty. So I always thought I was in a formal EU institution. It's not. And it's very peculiar in that sense too. They've been not implementing EU policy for not quite some time, and then more actively. And I think it's probably the Juncker plan that puts them a bit more front and center. I would think that again on energy and climate, when it comes to funding also large-scale resources in energy efficiency programs, they might be a relevant actor. They have a AAA and they de-risk types of investments so that they open up for other types of more risky financing. That's principally their job. So again, to be seen to what extent the Commission leaves space for the EIB for the scale of the energy transition. On defense, interestingly, I don't think they contributed so far, but you know, because of the plans that are cooking, it might be that they could also help to mutualize. I don't know. I haven't read anything. I don't know if you have any information on this. Anyone?
Just to complement on that to Pierre, the EIB can also have a role in terms of issuing green bonds for the energy transition. No? So it's a key player in this regard, in the issuance of green bonds and sustainability-linked bonds. And thinking, of course, now, for example, the Recovery and Resilience Facility, like 30% of the RRF, it's financed through green bonds. So perhaps here as well, the EIB in the financing, in contributing to the energy independence, will have a role in terms of issuing new debt instruments for that matter.
I want to follow up. I have been thinking a little bit about that. So both Rachel and Philip brought up about the nation states versus European. So I think, yes, I mean, both in the COVID, which was a health crisis, and this crisis, which is a security crisis, I think it's probably not to be expected that the EU as such plays a central role, right? Because health, there wasn't much, and security, I mean, yes, it's part of the treaties, but it's primarily in Western Europe, it's the NATO who should take the role, right? So it's not really that clear. I mean, we don't have a joint defense chief, or we don't have the equivalent to high representative in defense, right? So maybe it's not surprising. But then again, I think I would expect as the economic consequences of this become clearer, including in terms of the necessary energy transition, I would expect the EU again to take a stronger role. I would expect, but I might be completely wrong.
Thank you. I think you have just a very quick.
Just a very quick comment on the EIB, because I mean, I'm also very puzzled, but I think one of the things that's really interesting is that they actually financed massively the energy transition of Eastern Europe after 1990, right? They really invested heavily in transmission and production, and they made actually so much money on it that they had difficulties exiting their positions because they were so successful. So I think they really could play a massive role, but I think they're also maybe a bit worried.
Okay, thank you. Thanks for your patience. From the back.
You're welcome. Maria Barata, Research Associate at the Florence School of Banking and Finance. Actually, as a follow-up of Thorsten's last remark, but I would understand as a general tone of the presentation and some questions, we're kind of acknowledging from the start that we are living a crisis moment. And I wonder, I mean, of course, the ramifications of this event and this war are clear, not only from the seminar series sessions that we'll have, but also in all the instruments, actors, and rules that are involved. But I wonder how much importance there is in the EU narrative on calling this a crisis to shape the EU policy agenda, to advance reforms that were already kind of not working well for different reasons, also to foster and advance economic integration as such. So how important is it for these three dimensions to call this a crisis and not consider this just an event? Because not all important events are crises, right? And why is this important in this moment to state it as a crisis?
I think thanks. It's a good question. I think we're getting used to having crises around, and so it's also a mental template thing. And partly there might be also some integration fatigue, by the way. So, you know, because we've been always in crisis mode for the last, I don't know, 20 years now, no, 15 years. There must be, I guess, a limit of actors to accept that the solution is always European, and that I think points to what we're discussing earlier. The counter argument to that is the conference on the future, what is it called again, on the future of Europe, which might be then leading to some treaty changes. And that, I think, in that case, in that context, then the Ukrainian crisis would more be framed, I guess, as a crisis that can help in that. I don't know. I'm not answering your question, Maya. Sorry.
No worries. I was thinking also concretely on the SGP, but also on state aid. Often we have this mechanism of either suspending the rules or issuing temporary frameworks to deal with particular circumstances. State aid in specific, let's say the banking sector had a new communication in 2013, it's still applicable. Then now we have a new framework to deal with resolution of banks, but state aid is still applicable as it was in 2013. So do we need a crisis to kind of issue a reformed framework, for example, to deal with the existing problems in the banking sector that are sparked or enhanced by the existing situation, but not necessarily caused only by this event or this crisis, however we want to call it?
Okay, thank you. I should say I'm not giving the floor to anyone online because no one is raising hands. Let me know if I'm missing something. I don't want to treat anyone as second-class citizens. But if this is not the case, we continue with questions from the room. Yeah.
Just 2 points on the previous discussion as regards crisis creating states. And I quite understand. I do think actually that here in Ukraine, the state is being created by the aggression. It's not looking at the fiscal aspects now, but certainly has the impact of creating a state now. And the other point I wanted to make here actually a really interesting article by Rachman yesterday in the Financial Times, where he argues, why didn't the large, powerful states in the last 100 years not learn that they can't win a war against small states? They only can lose. And that's really a very good question, right? Which is before our eyes now, actually. And my second point is actually where I don't agree with what Philippe said and also Rachel said. I think there is an impact at the European level, clearly, in the sense of solidarization. For the younger generation who has not experienced why the European Union really was created in the first place, they say, okay, war can happen. We need this European Union, right? And we need a defense union.
Philip.
Is it also because, I mean, there is NATO, and right now we have at least a president in the White House who is kind of Europhile, I would say, not Europhobe like Trump. But again, this might change very quickly in 2 years, right? So that might then also make as you said, the early days, right? It might make them give a different kind of rational and also calculus on the European side.
I would like to make use of the questions that you suggest, and there is one that intrigues me and interests me as I think everyone else is. The second one under instruments. Will Ukraine war and energy crisis provide further impetus for joint fiscal capacity? I read taxes. Is this the question about whether this might perhaps in survey data eventually lead to some support for European-wide taxation?
So, I mean, I think even in the next generation EU, which is expenditure for the moment, eventually will have to be repaid. The question is how, right? And that's also calls for fiscal capacity, meaning taxation capacity. So already the NGEU, the next generation EU, are in calls for kind of opens the door for future common taxes in the European level. And I think that would be probably the next step, right? So it's just, yeah, it's I guess another kind of, we got the foot into the European fiscal union with but I call it the Hamiltonian glimpse, not the moment, but a glimpse in 2020. And now we get the next step in there through maybe the Ukraine master plan or some other initiative targeted for the war.
But the Resilience and Recovery Fund was accepted by the Germans as a temporary, single, unique measure, not as something permanent. So don't you see that the Germans would block anything going in the direction you just mentioned?
Missing, right? I mean, you have the foot in the door and then you push it. So I don't know, maybe
Hello, we can't hear in the room. We can't hear who's speaking.
All right. Through national contributions, I did.
Yeah, it's working.
It's working. Okay, it's through national contributions, and they may reduce the EU budget in order to be able to service the debt.
Just very briefly, a lot of the discussion was now, well, if you look at the military expenditure and all the, it's at the member state level and it's NATO, but isn't there somewhat a division of labor in the best Atlantic organizations, that NATO is the military arm and the EU is the civil arm, which is important in terms of energy, but which will also be very important in terms of reconstruction. I don't know how much that will be in terms of the money which is spent. And then again about the foot in the door. Well, you've mentioned before, Philip, that COVID was much more important, fiscally. Or in terms of the budget, which was used, but wasn't there, to keep the foot in the door, wasn't there just the news out a day or two that the funds which haven't been used for COVID should now be reused? So that means we have already announced the foot in the door which we have because of COVID will not be taken back. So it's not very far from a permanent institution, no? If you have this general crisis fund which is used and reused for different purposes.
Yeah, well, actually, just follow up also on Philip. So yes, I think I'm glad you kind of came in and kind of spoiled the party a little bit, because I think I might have painted a bit of a rosy picture. Yes, I mean, so I think that's, as you said, this negotiation will be brutal, and you can have a scenario where if you have again economic divergence, new coalitions may be emerging, that you're going to have a food fight there. I mean, that makes previous negotiation look like a picnic, right? So yeah, that's certainly feasible, and I guess we are father is the hope of the thought here, right? That the hope is the father of the thought, sorry. That this might turn out well, but there could be also other things. Now on the NATO EU, I guess the issue is that I mean, there are EU member states that are not part of the NATO and that are also not considering it. Austria and Ireland, for example, two are now wanting to join. But I guess this is the current kind of separation is kind of what has been in place for the last 40, 50 years. But again, with Donald Trump in the White House, that was already kind of being undermined. And with a possible return of him or somebody similar, that could be undermined again, right? I think there might be, I don't know, there might be a shift also on the European level towards more kind of taking on a bigger role in defense. And again, that might then again open the door for fiscal. So.
I still don't see questions from the online audience. I don't know if there are more questions here.
Sure, we have so much time. Another question, I mean, we kind of left out sort of the elephant of the room so far, which is the United States. And I was wondering, if you think about the Ukraine war, I mean, the biggest contributor, both in terms of equipment and money, has been the United States and the UK, right? Two non-EU countries. So I was just wondering, what does that say about the state of the EU, that a war that is fought on, the European continent, the people who support the arguably European power are two non-European countries, or non-EU countries, we should say. So I don't know, what do you take from that?
Yes. There are other costs, huh? Migration, for example. I mean,
is it? I mean, I mean, situation, of course, in our country, Germany, right, which is a very complicated, I would say, misinterpretation of our history. And that's the reason why they haven't stepped up yet. So hopefully they will eventually. But is it, I mean, so again, I don't know the numbers, but if you look at the Baltics, at Poland, and then look at the effort and support relative to GDP, is it really that low? I mean,
Relative to GDP, not,
Yeah.
but in terms of, I mean,
well,
yeah.
And the UK, yes, the UK is big. But again, then the other costs, I mean, the UK is keeping out Ukraine refugees with all kind of attempts, with all kind of administrative tricks, no? Giving a visa to everybody except for the smallest child, and then the family will not come. So, I mean, I think there are different kind of responses, and I think, but yeah, I think that, but I think you're putting the finger on a very important point. I agree with that, yeah.
Yeah, my deeper point would be, right, I mean, you only need later reconstruction if Ukraine stays a separate country, right? If they lose the war and it becomes Russia, then you don't, some of the later costs might not occur, right? So you first of all have to equip them to fight this, right? And arguably, I mean, I think the argument could be fairly easily made without the military equipment support of the UK and the US, the situation would look very different.
Can we come back quickly to the multi-level nature of the reinforcement of the state? I would like to know, maybe Rachel or Philip or even Hans Peter, what would you need to see fiscally to be able to say, okay, this is strengthening of the state at the EU level?
Well, I think partly in response to the last question, the fact that the United States is providing as much material support is that's, of course, by historical design, right? I mean, that was a compact that was made back in the 40s. And in my opinion, I'm going to give a paper on NATO enlargement in a week with really constructive effects also for European peace and security. I might let some European integration experts here answer the question about state building in Europe, but certainly mutualized debt with taxation behind it would seem to be the logical institutional step. But I mean, looking at the United States, as you know, spends almost 800 billion a year on defense. And that's before you take into account how much it costs to maintain the nuclear arsenal and veterans benefits. So I hope Europe doesn't have to go down that road. That is it's a bad outcome for the United States in terms of the vested interest that creates and how hard it is to unwind. So understand that, understand what Thorsten's saying about, you know, could be a misinterpretation of history that the Germans don't do more in the current crisis to help Ukraine. On the other hand, you know, speaking as an American to Europeans, be careful how you help, because you don't want to set up, I think, an institutional structure in which there are all those arms producing invested interests that keep you going down this path at the expense of so many other priorities. So I worry about Ukraine and the crisis there for that reason, also for the Europeans.
Thank you. Any other reactions?
I think Rachel is right, you know, joint debt plus joint taxes, that would be a clear empowerment. Right now we have empowerment surrogates, and I think the EIB is part of that. You know, take the European Chip Act, which was passed, I think, shortly before the war. And the Commission came out and said, oh, it's 45 billion euros. But then if you look clearly, deeply, it's 250 million in new money and I don't know, 500 million in repurposed old money, and it's given to the EIB to securitize some loans, and then they come up with the number, and this will leverage 45 million in loans to expand our infrastructure in chips. And now I wonder, this new energy plan, it says 195 billion will the EU mobilize. You know, they say mobilize. And, you know, I'm not sure how much real money this is. And also the only remaining funds from The NGEU are, of course, loans. All grants are gone.
Okay, maybe we can have a final point if you like.
No, but I think just to say that as of now, the fiscal integration has occurred through unconventional channels. I mean, as we know. And so I don't see a reason why this would go differently going forward. So I do believe that it's not the right moment in this energy crisis to raise a new tax and say this is going to be a new tax, it's going to be better, and you're going to not pay the same. No, you will pay the same. So European citizens, if we want to sort of normalize the European fiscal state and make it a classic state, yes, the own resources should be existing. But how likely is that going to be? So financial innovation, as before, is going to be relied on. And there are also interesting financial innovation that are coming up and that we don't necessarily see. I mean, it's a single resolution fund. No, it's a fund that helps banks, 60 billion euros levied on the private sector. No, so that's not something that happened before, but you can do the same all over again. And at the end, you have a sort of proto fiscal state. Through different mechanisms, securitization is another example, the role of the EIB, the balance sheet of the EU in the case of NGU. So altogether, if you look at the output, I think that yes, the fiscal state has increased. It's just that we don't call it the same. And the problem is then that the accountability mechanisms are not there, which I think is again an issue, also for the German parliament.
So yes, actually, I haven't really thought about this kind of EIB as being a kind of a proto into an instrument for fiscal integration. And again, we have something similar, I guess, in the US, right? We have the defense budget, we have the social security. I mean, all of these are kind of, a little bit almost like a cohesion fund, right? It depends. Well, it depends a little bit on political power, who gets the money and who gets the contracts. But so I think that, and I would not, I mean, maybe because I'm a finance guy, that's why I'm a bit biased, of course, but this is, I mean, this is the power of leverage, right? And kind of pulling in the private sector. I'm not sure whether it's always the most efficient way to do it with the EIB, but I think that there can be a strong mobilization. Now, will it all happen? I'm also skeptical myself, but I think it's going to be an important, it is an important instrument. And then, I mean, again, if you think about, and maybe as a concluding remark, I mean, where is there a case to be made for more integration, for more centralization, although it's a bit of an ugly word, right? If there's strong externalities, right? So, I mean, that's why in banking, because we have this cross-border banking and they have the integration of financial markets, there was an urgent need to go to the SSM, to common role, the ESAs, and so on. And I think actually some of us called it even before the crisis and then just shortly afterwards. And I think, I mean, again, environment, and if you link the Ukraine conflict to kind of an acceleration of the energy transition, environment, again, has very strong, climate change has strong externalities, right? Again, this would call for more integration on the European level. Now, will it happen? I hope. Of course, there's no guarantee.
Yeah. No, I think that the biggest question is basically that, no, how the EU will create or not a new fiscal framework, will issue new debt or not, to finance to cover all the costs that this war is having in the different realms, no? And yeah, the debate will continue in terms of new taxes or joint debt issuance, and who will potentially of the member states will support a new EU debt issuance plan or not, no? As we were mentioning before, this will be bring further clashes in terms of coalitions. And yeah, it's, I mean, they are instruments, and as we try to explain, some things have been already mobilized, but well, the big question is that, no, which kind of new EU fiscal framework for this? Well, thanks.
Okay, thank you very much. So it's almost 2 o'clock. The seminar comes to an end. I want to thank you, Maria, Thorsten, Pierre, again, for a great introduction to this series of seminars. Thank you, everyone, for the discussion. I think it was a very, very good discussion. At least I think we learned a lot, and I think we have also some takeaways. So I do hope that many of you will also attend the other seminars. So next week, same time, not sure about same place, but not far from maybe in the room next door. It will be about energy, transition and dependence. So it links up very nicely to what we discussed today, and also a very crucial topic. So I hope to see many of you next week again. Thank you. Goodbye.